just joining us for this series, welcome. We're talking about 5 Bank on Yourself FAQs, frequently asked questions, and I'm going to give you my answers to them. It's a little different than our typical style here on the FIFE Movement podcast show. Um, but hope you like this as we get a little more specific about this concept that I've been using as a client for about 7 years and has changed my life so much that it's now part of what I do day in and day out. I'm a Bank on Yourself professional, specialize in this concept, and help people, if it's the right fit for them, set it up for themselves. And I'm going to answer this question. I have not scripted out my answer because these are questions that I get asked day in and day out in conversations with people all the time. So today's question, FAQ number 3, is what are the downsides? Like, there's so many upsides to Bank on Yourself, and so many people talk about them, including myself. What are the downsides? And that's what we're going to get into today. So welcome to the FIFE Movement. I'm your host, Amanda Neely. This is the only movement that helps our generation create our unique feminine and entrepreneurial path to financial independence. Please be sure to subscribe and hit that bell so that you get future videos. If you're on the podcast, subscribe so that you get future episodes. There. Okay. So what are the downsides? The number one very big downside that some people choose not to do Bank on Yourself because of is that when you start your policy, this has been true for everyone that I've worked with, that you put in the funds and not 100% of them are available right away. There is some what we call cost of insurance at the beginning, that you haven't had any growth to help outweigh that cost of insurance. And so you might put in X, but only have X minus, I don't know, a certain percentage available to you. And a lot of people can't get over that initial cost. They want 100% of their money right away. One example of that is, let's say you've already built a really good wealth building machine through real estate. And you know that every single time you buy a property, you absolutely get 100% return plus, an X, Y, or Z available. And there are so many properties to buy that you need 100% of your cash available all the time. You can't make any kind of sacrifice to that because there's just so much opportunity, so much happening. You might not want to start a policy then, because you would have to give up a portion of that, even if it's just 10%, right? To be, if you're starting the policy, and that might not work for you, especially if you figure that all out. But let's say you're like still learning about real estate, or you know that there could be a lot more opportunity a year, but there's not the opportunity right now within the market you've chosen, or something along that line, and you feel like that initial cost of insurance, right, not having 100% of your money right away is worth it for the long-term growth of your money, even if you take it out to keep doing real estate, then that downside's worth it, but it's still a downside, right? If you start the policy and wait 30 days, you can't just all of a sudden get all your money back, right? So that's a big downside. The other is the growth part of it. Within a Bank on Yourself policy, you might not get the same as if you invest in an index fund or an ETF. You might be able to find a better rate of return somewhere else. The whole life policies are slow, they're predictable. There's even a guaranteed portion as long as you're working with a company that can back up those guarantees. But they're not really exciting. You don't get the big upswings of the stock market when the stock market does have those big upswings. You don't get the downsides either, right? When the market has the downswings. But that's just a fact of life. If you're more in the camp of, you got to speculate to accumulate, no risk, no reward. You want 100% of your money at risk and you love playing that game, then down the slow, steady return that's within a Bank on Yourself type whole life policy is probably a downside for you. For some people, it's not though. So, but we just have to acknowledge that. And I think those are really the two major downsides are that initial, cost of insurance that can be made up for within a few years, but it's still there at the beginning, and that you're not going to get a huge upswing when the market has a big upswing. You're still going to get that slow, predictable growth. Maybe it'll grow a little bit, but more than expected, but it's going to stay pretty steady for you. Right? I haven't met anybody yet that's gotten a 15% return in a whole life policy of any kind, at least within a year, right? But over time, it can grow to be a lot more. Okay, I think those are the two big downsides. I guess if I'm gonna be share one more, is that you have to have a health exam to do it. But if you're like, well, I don't think I could qualify for it health wise, don't worry, you can still own a policy, but have someone else be the insured. So they're the ones that go through the health exam, pass the health wise. But also don't count yourself out either. I've known people who have thought that they couldn't get approved that ended up getting approved just fine. So that might feel like a downside to you, but at least explore it because there are options, and you might not be disqualified because of your health anyway. Okay, that's it for today. Thanks for joining me and connecting with the FIFE movement. Tomorrow, I've got another FAQ, and then we're going to do number 5. I'd love to hear from you. Do you like this style? Do you want more of these frequently asked questions about a product? Do you want me to go back to more of the philosophical mindset kind of episodes that we've had? Please leave me a comment and let me know. And for now, as you go about your day today, remember wealth is coming your way. Your quest is to prepare for using it well. For more tips on how to prepare, be sure to subscribe, and to connect with the community, visit fifemovement.com. My gift has helped you. Please pay this gift forward by sharing this content with a friend. My gratitude in advance. To help this video be seen by more people, please hit the like button. And again, we invite your feedback in the comments. Do you like this style? Do you want me to do more off the cuff FAQ kind of things? And if you've got an FAQ, please leave that in the comments as well.